I like making videos when we're down the most. Didn't want to make a video on Friday, felt like it was unnecessary. When it's a big rally, you know what's going to happen next. When the Nasdaq's up 3% in a single day, you know what's going to happen next. So here we are with the sell-off, and it's important to frame how we're approaching this market. There are some people who approach the market differently, but are we playing for the next second? I'm not. Are we playing for the next minute? No. Are we playing for the next day? No. Are we playing for tomorrow? No. Are we playing for next week? No. We're playing month to month, long-term swings. Yes, some people say, oh, I'm a swing trader. I want to buy these call options and flip them in a couple days after a 10% rally. And if you get that, that's good for you. But that's not the kind of investment we do over here. We play swings. We look for swings. We want to benefit from swings. But we're looking to buy energy when it is down massive and play a long swing that doesn't materialize in a second, in a day, tomorrow, next week. That takes several months and possibly even a year to play out. We have a longer term time horizon. We're not playing for next second. So let's discuss today. Today had, in my opinion, a bit of a recessionary undertone to it. We saw the worst sector be consumer discretionary, down 4%. The Nasdaq was down a lot, but consumer discretionary was down 4%. I happen to think this move is not in line with the facts. Okay, well, Target might have some concerns. They're having all these excess inventories. Well, they decided to change their strategy, and they hiked their dividend to reflect their confidence. Nike yesterday, they beat earnings. They said they see no signs of consumer slowdown, and this isn't a company that reported a month or two ago, okay? This is a company that reported yesterday. Everyone wants to talk about how, consumer sentiment is at a 70-year low. Nike reported earnings yesterday and said what Bank of America said what the CEO of Target said what is predominantly occurring in corporate America among the consumer discretionary, which was down 4% today, and that's no signs of a consumer slowdown. Not we're seeing some slowdown, it's not a dramatic slowdown, we can rough it. No signs of a consumer slowdown. We're seeing commodities peak. We saw a little bit of a move and a softening today. I'm not concerned about that. Just like we saw a strong rally in the stock market and we're seeing some cooling off, totally natural process, the same may occur in commodities as well. And I don't know if they're going to fall forever. I don't think that's going to be the case. I don't think they're falling to new lows. I don't think they're falling to pre-COVID levels. They'll probably remain somewhere above that. And maybe there's going to be a commodity super cycle, and maybe they remain relatively strong. But the idea that commodities are going to continue to rise, I think is unlikely. What happened today, more specifically? The market was up in the pre-market. Why? China's taking down some lockdown stuff. We were down in the pre-market yesterday after hours. When China said that, we saw a bit of a reversal. But China coming online means one thing for one very important commodity that we discuss a whole lot on this channel. That is oil prices. Oil prices, they didn't make a dramatic move. Not a dramatic move. But enough of a move to make all the other commodities make a little bit of a move as well, and to make people feared. And that fear just built on itself. It spiraled, it built, and it plunged. A little bit. I'm not saying today was a total plunge. It is what it is. We have to deal with some volatility. Like I said, we're not playing for tomorrow. So why does what happens tomorrow really matter in terms of technical movements? If prices are good, which they are, excuse me, in my opinion, we've had a 3 times faster decline to 20% than experienced in the dot-com bubble. The amount of stocks down 75 and 90% are near their dot-com bubble peaks, not their dot-com bubble down 20%. Because why? This pullback's different than the dot-com bubble. ARK is down for 15 months now or more. Maybe it's 16 months, I believe. since February 12th of 2021. Interestingly, if you want to consider some conspiracy theories, the low of ARK was not when the S&P 500 hit its low on June 16th. Okay? It was actually over a month before, on May 12th, 2022. Wouldn't it be quite interesting if we went from a February 12th to a May 12th? I'm not saying that's possible. I'm not saying it's going to happen. It's certainly possible. But I find it just quite interesting because, I respect technical people, particularly Mark Newton from Fundstrat. I think he's the best technical person I've ever seen. Obviously, there's DeMark. And I have to give credit to Mark Newton for calling this turnaround in the market. He put something out on Twitter. So if you're a technical person, if that's what you like, I would suggest him. I'm not. I consult and learn from and look at what those people are saying. If you're a technical person, you might find something interesting with that February to May 12th thing. I don't know if it's real. I have no idea. It's not my area of expertise. Like I said, I have a different kind of strategy, longer term time horizon, a bigger swing desire. And I think there's tremendous potential to get big swings in the companies most likely to experience big swings. And those are companies that can grow 10x from their stock price. As we used to talk about on this channel way back, we were saying we don't like Microsoft, Amazon, the FANGs, okay? People are calling them growth stocks. We don't consider them growth stocks. They're not growth stocks. Growth stocks are stocks that can go up 10 times, that can 10x. That is growth. Not, they might increase cash flow by double digits this year, 10%, 20%. Whoa. No, okay? We want big frickin' moves here. So, real growth stocks, my opinion, well-selected ones, are well-priced. And see this map? You know who discovered this land, United States? Christopher Columbus. Was that an easy journey? Was that a walk in the park? Was that a low-risk job to do? To cross the Atlantic Ocean on a ship? No. But there was a reasonable destination. He obviously got surprised along the way, but discovered something big nonetheless. Reasonable assumptions. Knew that there was probably going to be land on the other side. Figured out that the world was probably round and this made sense. And then took the risk in a well-calculated way. I think right now you have to be like Christopher Columbus. Have a solid understanding of what's going on in a particular growth company or in a future rising technology. This is the time. This is the time, in my opinion. I get it. It might be down tomorrow. It might be down 5% tomorrow. It might be down 10% tomorrow. I get it. It might happen, okay? But do your homework and be like Christopher Columbus. In my opinion. This is my opinion. This is how I'm playing it right now. This is how I'm playing it right now. I'm taking risk. I'm not afraid here. I'm simply not afraid here. Simply not afraid. So, people are going to try to get you to be afraid. They're going to be afraid. But it's typically when people are most afraid that being calm pays the most. We saw 2 days of the put-call ratio below 1. That is a good sign in my opinion. It means that the hardcore consensus bearishness was not present yesterday when we had a down market. Today, obviously, maybe it was. We didn't hit a new low for the week. We're not doing anything crazy. The chart is still in a short-term uptrend, long-term downtrend. We'll see what happens. Again, underlying this and the downtrends, short-term and long-term, is the notion that ARK bottomed on or local bottomed, we'll call it, because we're not 100% certain the absolute bottom is in. We can't say that we know that. ARK bottomed May 12th. The S&P 500, the three major indices, bottomed June 16th. That is over a month of difference. I find that quite peculiar. Why? Because ARK has been in a downtrend for a year and 3 months. It's had a year and 3 month pullback, correction, whatever you want to call it. It got within $2, less than 10% of its March 2020 absolute low. Think about that. ARK, the future high flyer loved company, or ETF rather. And importantly, if you look at the composition of ARK, you'll see Tesla is the second or third largest position. Tesla and Roku right around 8%. Huge chunk. And it was previously much larger. And they've sold a lot of it because it got too big. Tesla is still well above any relevant prices that mattered before or shortly after March 2020. So if you take Tesla out, I haven't done the exact calculation, but my assumption is ARK was well below its March 2020 absolute low. Just to give you some perspective on how I'm viewing some prices. So that's today's video, and until next time, peace out.